Gopal, should we start?
Yes, Mohit, I think we can start.
Yes, so welcome everyone. I guess this is our eighth session of eighth weekly knowledge session on indirect taxation by ALC. So we welcome you all, and those of you who are regularly attending our session, a big thank you. So without further ado, we'll start the session. Yes, Gopal.
Mohit, am I audible properly?
Yes, you are audible.
So, welcome everyone. We'll start with the case laws first, and we'll discuss few interesting cases. The first case is from the High Court of Madras. This case, the party name is this case, the party name is GU Shipping India Private Limited versus the Assistant Commissioner of CGST and Central Excise. So in this case, the supplier is a provider, the supplier is a service provider providing the services of freight and leasing or the renting of the vessel with the crew members. So prior to 2018, the supplier was classifying it under 996602 and was paying 18% GST without availing ITC as per the rate notification. Sorry, by availing ITC and paying the taxes on at the rate 18%. However, with effect from 2018, the rate notification was amended and the GST rate was reduced to 5% subject to the condition that no ITC should have been availed. However, the petitioner was paying the tax at the rate 5% and at the same time was availing the ITC on the inward supply. So the department issued a show cause notice saying that because you have availed the ITC, you have breached the condition of the concessional rate of 5% and you are required to pay the tax at the rate 5 tax at higher rate, that is 18%, and demanded the differential duty. So this case went to High Court, and the High Court specifically, and one more thing, this show cause notice was issued under Section 74 by alleging the willful suppression, etc. So this case went up to High Court, and High Court observed few things. Regarding 74, they did not specifically say whether 74 is invocable or not. However, they said that even if the taxpayer has inadvertently taken ITC while discharging concessional rate of duty, the department should have issued a show cause notice by asking why the ITC should not be reversed rather than going for the higher rate of tax. And rather than demanding the duty of differential tax on outward side, department should have for the reversal of ITC that has been inadvertently taken. But in this respect, the High Court specifically mentioned that the assessee is also liable to pay interest and penalty at the rate 100% under 74. So while 74 was maintained without specifically observing on what ingredients of 74 were present, but on the demand on outward side, they specifically remanded the matter back to the department to determine the actual amount of ITC that was wrongly availed and utilized, and for determination of interest under Section 50 and penalty at the rate of 100% under Section 74. So, yes, Mohit, you were saying something?
Yeah, first you conclude, then I'll.
Yeah. So in a nutshell, the High Court said that just because the assessee has inadvertently taken the wrong ITC, which was not allowed because of the concessional rate notifications condition, the department should not have asked for the higher rate of duty on the outward side, rather could have asked for the reversal of ITC.
So I think this has been the general principle followed by the courts every time. So even in service tax regime, in C-Stat, we had one rule 6(3)(a), which talked about proportionate reversal of ITC. So when we used to file that form ST3 service tax return, so in that form it used to ask assessees that whether they want to avail the option of proportionate ITC or not. So there are lot many judgments of CSTAT wherein the taxpayer by mistake they selected no when they actually wanted to select yes, and department computed their CSTAT reversal liability by the treating the option as no, which was incorrectly selected by them in their return. So there also the tribunal sided with the assessee, saying that if the assessee wants to exercise a particular option, but by mistake they have selected incorrect option in a return, or they have violated some or other condition to avail any benefit or avail any option, then the focus of the department should be to get that condition rectified and not deny the benefit of the option which assessee wants to exercise. And this is in line with all the judgments we have had in the past. So I think primary criteria will always be which option assessee wants to adopt rather than what department wants the assessee to adopt.
Right. Mohit, in this case, the High Court specifically observed two, three things which I would like to discuss. First thing is that they said department's intention should not be to collect the higher taxes, because on the outward side, if the differential tax is more as compared to the ITC availed, so just because outward side the department is seeing higher tax collection, so department should not go for that. So when this specific remarks is used, how do you see this remark uh, as a as a defense in another cases or similar instances where the department is simply asking the higher rate of duty or simply demanding higher amount? So basically, as per their comfort, they are demanding. Had it been a ITC, had the ITC amount been more, they would have demanded ITC reversal. So how do you see this?
So
Maybe in some other cases.
So I think the point of view of GST department is that if the assessee has violated any condition, then it is the discretion of the department which direction they want to go in. But the settled principles we have that gives this option to the assessee that whenever any condition has been violated by the assessee, so it is up to the assessee whether if they want to rectify the violation which they have made. So if they rectify, then the original option which they selected, that is available to them. But if they are not able to, or they do not want to rectify the violation which is done by them, then obviously the higher rate which is given in that notification, that will apply. But department at their discretion cannot say that now you will go in higher rate of tax because you have availed ITC or some sort of this thing. Because we have seen cases wherein, let's say, by mistake, assessee availed some ITC. Maybe 10,000 rupees ITC was excess availed, which was not supposed to be availed. And basis that if we give this power to the department, then for that some excess availment also department can come and say, since you have availed some ITC, some portion of the ITC which was not eligible to avail, you will still go into the higher rate category. So the option should and is always with the assessee.
Right, Mohit, right. And Mohit, this will have implication on other cases also where there is concessional rate based on this specific condition. For example, the restaurant services. So in the case of restaurant services, it is specifically mentioned that a restaurant or outdoor catering. So there is a specific explanation which says by not taking the ITC, you cannot go in the higher rate, or by choosing this, you cannot opt for the ITC. So there is a specific, unless it's a declared premise, so for which you have to give the declaration if you are considering your premise as a declared premise. So in those entries, there is a specific explanation. So do you think this judgment will help those cases also where the assessee by mistake paid the claimed the ITC and paid higher tax without going for the declaration, or without giving any declaration, they have opted for higher rate, whereas they should not have opted for higher rate because as per the explanation. So how do you see this judgment as applicable to other cases?
So I think the case of restaurant or the real estate, residential real estate projects, those cases are different because in those cases, it is specifically mentioned in the notification that if rate is 5% without ITC, for restaurant it is 5% without ITC, For there are residential projects, it is 5% without ITC. So they have mentioned in the notification itself that the rate is always going to be 5% and ITC is always going to be ineligible. Assessee does not have any option. Assessee cannot go for 18% or 12% with ITC. So once a particular rate is fixed and the condition of no ITC availment is fixed, then that is applicable to both assessee and the department. So if the assessee has availed ITC, in that case, department will only have the power to disallow ITC. Conversely, assessee also does not have the right to avail
Right.
ITC and then go for the higher rate. So in these cases, I think the notification itself is clear. So this judgment per se is not of much value because there is no confusion in the law.
Absolutely.
But if we discuss the other kind of lapses, like you mentioned, if the declaration has not been submitted. So for GTA, if we take example, we have to give the declaration before 31st March. So for those kind of lapses, again, we have some judgment of CSTAT, majorly CSTAT pertaining to Rule 63A. So in Rule 63A also, by June of the financial year, if I remember correctly, the assessee had to give a declaration. So there also we have a lot of judgment saying that even if that declaration was not submitted by the due date, that is only a procedural violation. So I think similar principle we can apply here also, that if the assessee has done some procedural violation like not filing form by the due date or some other kind of procedural violation, then also the substantive benefit should not be denied. Maybe some small penalty can be levied by the department for not following the procedure properly, but that should not result in denying of the substantial benefit to the assessee.
Right, right, right. And one more interesting thing in this judgment was if we refer to para 34. So they specifically said denial of concessional rate of duty cannot be justified as the authorities under the statute are not expected to impose a higher tax liability on account of inadvertent mistake that may have been committed by an assessee. Now, at this paragraph, they are saying that it is an inadvertent error, and this is the observation by the Honorable High Court. But at the same time, they are confirming the penalty under section 74. So if it is not willful, if it is inadvertent, confirming the penalty under 74, how do you think whether the assessee or the petitioner in this case should challenge the 74 before the higher forums, or how do you see this specifically when the department is already aware? When in 2018-19 or whatever period, I have claimed the ITC and paid tax at the lower rate, which is apparent in my GSTR return, everything is available to the department at the time I file the return. Still, they are first they are invoking the 74. Second, it is being confirmed by the Honorable High Court under 74. Thirdly, the Honorable High Court specifically noted it as an inadvertent error. So can it be a case for 74 at all?
You would see in this case, once the department raised the demand for differential tax liability, that tax liability itself has been set aside by the High Court, saying that you can only raise the demand for the ITC. So once the demand itself has been set aside, there is no question of penalty. The department, any which case, they have to go for the fresh show cause notice imposing demand for the incorrect or ineligible ITC availed. So that will be a separate proceedings.
Right, but they have mentioned that the department has to issue a department has to redetermine the ITC along with interest and penalty at the rate 100%. And they have discussed at length that 74 may you have an option of you have amnesty of lower penalty and all. So although the department will issue a separate show cause notice and this is a remand back case. So the Honorable High Court has given a fresh timeline which otherwise is not available under 74 also for 1718 or till 1920. So for that, if the department issues separate show cause notice under 74 also, will that sustain at all? Because the this is an inadvertent error as specifically noted in the judgment.
Uh, so I think once the department goes for the new proceedings, because that observation which was given by High Court, that was merely a observation by High Court. That was not the ratio decided. And even otherwise, high courts and Supreme Court, they usually do not go into the factual aspect unless that is necessary for the legal ratio. In this case, this particular aspect was not legally necessary, whether the ITC was availed by mistake or by reason of fraud. So I think that observation of High Court, because it is an observation. So, in my view, when the department again goes for the fresh show cause notice, the question of penalty will again, whether it will be leviable or not, assessor will have grounds to contest. Merely based on this observation, department cannot say that since High Court have now accepted, so case will be under 74 only. I think the assessor will have ground to argue.
Right. And in fact, in my view, they can obviously contest because the High Court has given the benefit based on that particular point that it is an inadvertent error. So higher tax cannot be demanded just because they have taken ITC inadvertently. So I think the assessee will have a strong ground to contest that it is not a case of fraud. So at least for the first, at least for those period which are beyond the limitation under 73, the demand should not be confirmed, or at least for the penalty that should be set aside.
Mm. Agreed, agreed.
Right. So anything you want to add on this in this judgment, Mohit?
No, no, I think we can move on.
Okay. So we'll move to the second case. The second case is from the Honorable Supreme Court. This again a very interesting case. This pertains to the previous tax regime, erstwhile regime, Rashtriya Chemicals and Fertilizers Limited. So I'll just keep it in brief. So as per the notification number 75 by 84 Central Excise, so this is a very old judgment, old notification where there was exemption on the purchase of naphtha on in case that particular naphtha is used for the fertilizer, for the manufacture of fertilizer. Now, the assessee in the instant case was procuring naphtha, using it along with some chemical and using it in a boiler which goes into production of fertilizer as well as some non-fertilizer product. So the department said because you are not using it for the manufacture of fertilizer in totality, so they calculated the proportionate amount and denied the exemption, saying that it is not, to that extent it is not used for the manufacture of fertilizer. So the Honorable Supreme Court specifically noted that this uh, ultimately the intended use, because this is not possible to determine how much amount of naphtha is being used for fertilizer and how much is for non-fertilizer product. So they set aside the demand on this ground, and also they said that the intended use was the manufacture of fertilizer only. So they allowed the exemption in on this ground particularly. Secondly, they also noted that the assessee, being a PSU who was already claiming the refunds, rebates, and various government subsidies, so even if they had paid the amount, the tax amount, they could have got the refund, and also this was a revenue neutral for the assessee. And on the limitation aspects, also they said that this limitation extended period of limitation was not warranted because the suppression was not deliberate and positive intention to evade duty was not there. And as they mentioned about the PSU, the government, the company being a PSU, which was eligible for the refunds, and also the situation being a revenue neutral, the case of extended period of limitation does not arise, and hence the extended period was to be set aside, and the entire and the demand was barred by limitation. So I think this PSU case is already settled that in case of public sector undertakings where the majority portion of the stake is held by the either the central government or the state governments. So it is settled, I think, in various judgments, central, some depository, CDSL and all. So there are other judgments where it has been said that in case of PSU, the extended period of limitation or the case of fraud or willful misstatement cannot be made unless department comes with a very strong evidence. So there's a rebuttable presumption that the extended period of limitation cannot be invoked on PSUs per se. But in this case also it was a PSU. So that is one thing that that can impact the other case, this particular uh, point that PSU being eligible for the refunds and all, the situation is revenue neutral and hence the extended period of limitation should not be invoked. I think this would be helpful for other cases also, not related to excise, even in GST, where the case of RCM is there. So in the case of RCM, like now, with effect from 30th January 2026, there has been amendment in the case of intermediary. So now the foreign intermediary services are foreign intermediary services may be subject to the tax under import of services as under RCM. So if any demand and all comes and similar likewise cases like the Northern Operating System case where the demand was raised for the prior periods, saying that tax has not been paid, but the ITC was otherwise eligible. So extended period should not be invoked in case of revenue neutral situation. That can be one takeaway from this. And the other takeaway on the merits is the actual use versus the intended use, and where it is practically not possible to determine how much amount is going into the actual use and how much is not going into the use for the manufacture of fertilizer. So that can also be one of the takeaways, although that will not be directly relatable, but in different cases that can be seen. Anything you want to add on to this, Mohit?
So in this principle of intended use, that has been, again, this has been a long-standing principle given by the courts. And that is also very important in GST because if we see language of Section 16, so Section 16 also uses the term where any input or input services or capital goods are intended to be used. So if a particular product, the assessee is able to demonstrate the intent was always to use in a taxable supply, but actually it was not able to be used, then also the ITC is eligible. So in a lot of cases, in case of normal loss during manufacturing activity, we take the same ground that even if some portion of the material is lost during manufacturing, but since the material was always intended to be used for manufacturing, which is a taxable supply, then the entire ITC should be available. Similarly, for any other sort of situations where the raw material or any other sort of inputs, they were purchased by the assessee with the intent of using them for taxable supply, but they were not been able to use, assessee was not able to use them actually due to some reason. Then also he should be eligible to avail ITC because the intent was always to use them for a taxable supply. I think that is a very important ratio which will be very, very relevant in GST.
Right, Mohit. And even in the customs also, so the the general exemption notification, there was some entry, I think 528A or something. So where the import is duty free or at concessional rate, subject to the use in the manufacture of so and so item. So that was for the lithium ion cells. So if the importer is importing and not using himself, but is supplying it to the other manufacturer, so there also we can see what the intent of the import is, whether I am actually manufacturing. So this can have a large implication, particularly because it is from the Honorable Supreme Court. So this should be carefully looked into in various aspects, in fact. So like as you mentioned, Section 16, and then the exemption, there are various other exemptions also where the intended use is important, whether in GST or customs. So they should be relevant there also.
Correct, correct.
Yes. So we'll move to the third case, and the third case is from the GSTAT, so GST Appellate Tribunal. Uh, I think we discussed one GST 80 case, Mohit, in the first session, initial session. That was from the regular cases, but today we'll be discussing about the anti-profiteering case. So there are two cases of tribunal, and the will be both are on the similar line. So we'll discuss together the judgment from the GST 80 in the case of Unnati Associates. So this case is particularly concerning the uh, anti-profiteering case made against the Unnati Associate, where the DGAP, Director General of Anti-Profiteering, finalized the report that the Unnati Associate has profiteered by way of not passing on the benefit of input tax credit from the while it switched from pre-GST regime to GST regime in the case of some development, some real estate projects. So the report was finalized and the amount of profiteering was determined. Now, while the regarding the calculation, there were a lot of things that has been discussed, computation and all. But for the sake of brevity, I'm not going into the exact computation. But two, three things that emerge from this. The important aspect that the respondent Unnati Associate, they contended before the tribunal that interest is not leviable because they accepted that they have profited and they'll pass on the amount to the claimant. But with respect to the interest, the respondent contended that interest is not leviable because there is no provision under the act, and they contended that section 171 only talks about the reduction in price and it does not talk about the interest on the same. Whereas Rule 133, Sub-Rule 3B, it talks about the interest to be paid at the rate 18%. So they relied on some judgments in the case of JK Synthetics and all older judgments to say that in absence of any substantive provision, the interest cannot be levied. And they also argued that there is no definite computation mechanism for the interest, and where the measure of levy is uncertain, the levy itself collapses. So regarding the interest, the Honorable G-Stat specifically relied on the judgment of Honorable Delhi High Court in the matter of Reckitt Benckiser India Private Limited, where the court specifically noted that the ambit of Section 171 is very broad enough to empower the central government to prescribe penalty and interest so that the suppliers are deterred from pocketing the benefits meant for the consumer. So ultimately, the objective of the provisions with respect to anti-profiteering is that the suppliers do not retain the benefit, and whatever benefit government is providing, either by way of the input tax rate availability or reduction in price, etc., reduction in tax rates, etc., that should be passed on to the consumers. So the Honorable High Court in that case noted that the Section 171 is very wide to ensure that a reduction in tax rate avails to the reduction in tax rate or the input tax rate availed results in the reduction in price of the goods, and it encompasses within its power to ensure that such conduct which leads to profiteering does not take place. And regarding, so accordingly, the Honorable Tribunal in this case allowed the interest as imposed the interest as well to be paid to the claimant. And they also noted that where the supplier retains such benefit, the amount so retained assumes the character of excess consideration collected from the buyer, and the interest being a compensatory in nature, it ensures the restitution of the time value of money that rightfully belongs to the recipient. So they said that the respondent is liable to pay interest at the rate of 18% from the date of collection till the date of refund. So this case is particularly relevant because lately because of the drafting of Section 171 and Rule 133(3)(b), specifically after the amendment in this Rule 133(3)(b), the respondents uh, or the suppliers are contending that interest is not payable this because of absence of provision under 171. So this will be very relevant in this will be very relevant because the tribunal has taken an approach that interest should be payable, and they have, as so far they have settled that section 171 is wide to cover the interest as well. Mohit, any view on this, whether interest is payable or not, specifically when the 171 is silent and 133B, there is an amendment. Earlier it was not there. Mohit, am I audible? Hello. Mohit, are you there?
Yes, yes, I am here. Am I audible? Hello.
Yes, yes, Mohit, you are audible.
Uh-huh. So as I was saying, tribunal has said 121 is wide enough to uh, levy interest and prescribe the power of interest and penalty levy to the department. But Section 171, if we see, it does not have specific provisions for levy of interest. The provision for levy of penalty was introduced later on by the government, but there is no provision for levy of interest. And we have many judgments wherein for the main charging section of tax, the courts repeatedly held that for interest, the specific provision has to be mentioned in the act itself. It cannot be mentioned through rules or notification. I think same notification, same principle should apply here. So in absence of any specific provision in 171, the interest should not be leviable.
Mohit, we lost you in last few seconds.
And yeah, there is some network issue. I'll join I'll rejoin. Gopal, you continue.
मोहित आपकी आवाज बीच में ब्रेक हो गई थी.
You continue. I'll rejoin from other device. There
Yeah,
is
yeah, sure,
some
sure, sure.
network issue.
So, moving on to the next discussion, this is regarding one update. And so, from there's one GSTN advisory recently. So, this I think it was there on yesterday only. And what is happening that in case of SCNs and the adjudication, many a times the taxpayer pays the demand under protest white DRC 03, either by mentioning in DRC 03 that they are paying under protest, or without mentioning they are filing the DRC 03. But post that, when the order is issued by the adjudicating authority, the order mentions the demand as nil due to prior voluntary payment. So when the demand is nil, the taxpayer is having no option or no practical possibility to file the appeal before the appellate authority against such orders. So the recent advisory, it is saying that the whatever amount you have paid through SCN, unless it is explicitly admitted, it does not amount to acceptance of demand. Secondly, they said once, even if you make payment through DRC 03, unless you have admitted it, you retain the right to contest the liability and file the appeal under Section 107 before the appellate authority. And if you have a practical difficulty because of the demand amount being nil, the taxpayer can approach the adjudicating authority for the rectification of the same, and post the rectification they can file appeal before the appellate authority. So this was the advisory. Now it comes with few things, and uh, first issue first thing is whether the advisory itself is uh, having any binding effect on the department, because when practically we go to the department and say that even if we have made payment through DRC 03, it should not be counted as voluntary payment because we have not explicitly admitted the liability, and we approach the officer to rectify the order. Whether they will actually rectify it or not, whether this advisory is binding on them or not, because it's an advisory by the GST portal. It's neither a circular nor a press release nor a notification. So how the officer sees this, that will be a challenge. Secondly, this is giving a very big relief because so far the department was taking a view in all the cases whenever you are making payment through DRC 03, they were only considering the heading of the DRC 03, which talks about intimation of voluntary payment. So department was always of the view, even if you make payment through DRC, even if you mention in the remarks under protest, department always said that there is no provision under the GST law which talks about payment under protest. So it is a voluntary payment, and you cannot either appeal before the appellate authority. So basically, you cannot get the refund of the same. So This advisory will be very helpful because it specifically mentions payment made during the SCN stage without explicit admission of liability does not amount to acceptance of demand. So this will help the taxpayers to file an appeal before the appellate authority or wherever they have paid. Because I remember there was earlier a there are cases where during the search seizure investigation, many a times taxpayers make payment under coercion or for whatever reason, they make payment through DRC 03. So in those cases also, this will be very helpful if you have paid any tax which you should not have paid or which was not payable. So to claim the refund of such taxes is a very difficult task. Practically, it's very challenging. So this advisory should be helpful to say that it is not an admission of liability at all. It is not an acceptance of demand, and if it is actually not payable, it is refundable, and you can apply for the refund subject to various timelines or the Article 265 of the Constitution of India, etc. Mohit, have you rejoined? रिया मोहित ने ज्वाइन किया है क्या?
Not yet, sir. He is not joined yet.
Okay, okay. So this by the time Mohit joins, we can discuss on this advisory or the other judgments also. And if anybody has any question, they can put the question also. We'll take up the questions, all the questions together. Anybody from the participants or any other question also, if we have.
Sir, is there any network issue?
Not from my end, but I think मोहित के कुछ नेटवर्क में इश्यूज हैं.
Okay, okay.
So I was waiting. I'll connect with Mohit also. एक बार आप connect करो ना. Meanwhile, we'll continue the session. If any participant has any question, they can raise their question also. We'll discuss the, and if anybody wants to talk in person also, they can unmute themselves for the queries or they can put in the chat.
I think Madhuri Mehta has asked a query.
In case of bank where we do have exempt as well as taxable supply, we have huge amount of ITC in credit ledger. Can we claim refund of it? If yes, under which section? So, Madhuriji, refund of ITC is governed specifically by 54.3, and there only if you have export or inverted duty structure, which is not the case in your situation. So, refund will not be permissible. Rather, when you have exempt as well as taxable supply, so there is an either there is an option of reversal of credit 50/50, which is there in section 17 itself, or you can go for the proper calculation as per rule 42 43, and you can accordingly reverse the ITC, but refund is not possible. If excess input tax credit has been claimed in a GST return but has not been utilized and the same is subsequently reversed in a later return, is it mandatory to make the reversal through DRC 3, or can the correction be done through GST return itself? So, Mahimaji, there's no specific provision or clarification how you have to reverse, but there are practical challenges. And when you reverse through DRC 3 or when you reverse through 3B, in both the cases, different officers, different jurisdictional officers take different view. Mohit, would you like to highlight on the same?
Yes, yes. So, see, all of us, we need to say is, first of all, whether any interest liability is there or not. Because let's say you have enough balance in your electronic credit ledger. So when you are reversing the ITC, you do not need to pay any interest. In that case, if you reverse the ITC through DRC3, so in case of DRC3 payment, where only tax amount is paid but no interest is paid, there is an automatic presumption from department side that every DRC3 should be with interest. So in a lot of cases, we have seen where the DRC3 was paid only with tax amount and automatic. Uh, well, am I audible?
Yes, Mohit, you are audible.
I think Mahima ji sent a message that I am not audible. Yes. So as I was saying that if you file a DRC3 of tax amount without any interest, then in a lot of cases we have seen automatic notices being issued by the department saying
So Mohit, I think if you are not audible to Mahima, I'll pass on your message.
got distant.
Hello.
Yes, Gopal, there seems to be
Mohit,
some
I'll pass on your
connection
message.
issue at my end. You can.
If you are not audible, I'll pass on your message. I got your point. First thing is regarding the when you are making payment through reversal through DRC3, what department presumes that it is with interest. So when you are making payment through DRC3, they'll ask for the interest. There will be separate adjudication for that, and that will create unnecessary litigation. First thing, Mohit, correct me if I go wrong anywhere. And second point that I want to add on to this, when we have availed from the 3B, and let's say if you are reversing in the same year, then it will be very helpful in GSTR 9 preparation also, that the net ITC will be correct ITC what we have claimed. And then we don't have to separately put a remarks that we have reversed through DRC3, etc. So for the annual compliance or for the record maintenance also, it is suggested to reverse through DRC, reverse through GSTR, GST return only. Correct, Mohit? I think Mohit again has some network issue. So, Mahima ji, does this clear your query? Just let me know. Okay. So, Madhuri ji, you have availed the same 50% rule, then it's fine because there is no provision for refund because you have exempt supplies, so you are not able to utilize that. That is okay, but you cannot claim the refund unless it falls in the two category of either zero rated or the inverted duty structure. Mohit, are you there? Anybody having any other questions? My dealer has received the notice for late fee and penalty for delayed filing of CMP 08. The office dropped the late fee and my dealer paid the action paid along with interest. Now we have received APL 03 for review. Commissioner is saying penalty is applicable for tax paid after 30 days. That if one officer dropped the penalty, can again penalty be? Further, we have paid along with interest before issuance of SCN. Is it legally permissible to initiate penalty? This respect circle number. Mahinder sir, when you talk about APL 03 for the review, so the department has a power to revise the order under 108. So perhaps they are invoking section 108. So to that extent, yes, they have power. Regarding the regarding the question about the applicability of penalty itself, when you are making payment under 73 before the issuance of SCN itself, so in that case, no penalty is payable if you have made the payment of tax and interest along with that. So in that case, you can contest it before because the order of the revisional authority is appealable directly before the GStat. You can appeal to GStat and uh, accordingly you can contest this if you have made the payment before the SCN itself, that penalty should not be paid.
But we are taking the provision under section 2311.
Sir, your voice is very low. It's not audible properly.
Yes, sir.
Mahinder sir, if you are saying something, your voice is very low. I'm not able to hear you properly.
Yes, yes. Can you hear me? Now, can you hear me now? Hello. Can you hear me?
Mahinder sir, if you can please text because I'm not able to hear you at all. So if you have any particular question, if you can text on the chat box, that will be helpful. Madhuri ji, to your question, as per the revised tax rate structure, where it is said that percentage without ITC, in that case, ITC related to those supplies, we have to reverse it. So there are different views. You can one view is that the ITC is not available at all, so you don't have to claim it and reverse it when you are going for that concessional rate of duty. One view is that it is reversible in terms of, because if you read the explanation 4, it talks about other common credit to be reversed in terms of rule 42 or 43. So the other view is that you reverse it as if it is a rule 42 case. So permanent reversal, you reverse it in 4B1. But having said that, one view you can take is ITC is not available at all because you are going for concessional rate of duty. It is not your ITC at all. So you don't claim the ITC in table 4A itself. So you don't have to reverse it. Okay. Is it permissible under section 7311 that if you pay tax? Mahinder
Hello.
sir, there's some interpretational issue in this. There's some interpretational issue in 7311 because if we read 7311, it specifically overrides subsection 6 and subsection 8, which talks about the issuance of, which talks about the not to serve any notice, or subsection 8 talks about that no penalty shall be payable and all proceedings shall be dropped basically within 30 days if you make payment. So all the proceedings shall be dropped. But if you see subsection 5, which allows voluntary payment with interest, it nowhere mentions about that the subsection 11 nowhere overrides subsection 5. So we'll have to contest this, how this, because if we go by the plain reading, it says that the irrespective of subsection 6 and subsection 8, the penalty shall be payable where amount of self-assessed tax or any amount collected as tax has not been paid within a period of 30 days from the due date of payment of such tax.
Okay.
So we'll have to contest it legally it is legally there is an interpretation gap that they are not overriding the subsection 5 or the voluntary payment, where it is talking about only the tax and interest to be paid before the issuance of notice.
One more thing, there is circular also. Hello, hello. There is circular also.
महेंद्र सर,
Yeah.
आपकी आवाज एकदम भी नहीं आ रही. आई एम नॉट एबल टू हियर यू.
Okay. You're not able to listen. I'm not audible.
हेलो.
I'm audible. I'm audible now.
Yes, you are audible, but
Hmm. Hello.
hello.
So I just I want to say there is circular also. There is circular binding on department.
Sir, if you
Hmm. Hello.
Gopal sir, are you there? Because you are not audible. Your voice is not audible, sir.
Gopalji, you are not audible.
Mahendra sir, is
Yeah.
it audible now?
Yes,
Yeah.
yes,
Now.
yes. Now audible.
Yes, sir. So, Mahendra sir, are you talking about the circular dated 31st December?
Yes. Yes. 31 2018. Yes. 31 December 2018.
Sir, I can't hear you. Are you talking about the circular dated 31st December 2018?
Yes. Yes.
Yes, sir. So if we refer to the serial number 2 of that circular now, it says as per the provision of 7311 penalties payable. So they have mentioned the provision. Show cause notice is where it appears to the proper officer tax has not been paid, where input tax rate has been wrongly availed. Provision of 73 can be invoked only when the provision of 73 are invoked. So when the show cause notice itself cannot be invoked, so although they talk about the delayed filing of GSTR 3B, but after the due date of payment has been paid, but in case of delayed 3B, it is accordingly clarified that penalty under 7311 is not payable in such cases, since the tax has been paid late in contravention of their general penalty. That is a separate thing. But 7311 penalty cannot be invoked in case of delayed filing of this GSTR 3B. So similar analogy can be adopted here to say when we have made the payment in terms of 73.5, notice itself is not invocable because there is no short payment of tax. So if the department cannot issue a show cause notice, they cannot invoke the penalty under, they cannot impose the penalty under 7311. So that can be a ground to contest it, sir. Yes, sir. Madhuriji, there will be a difference. There will be a difference in 4A5 and the system computed, but that difference will be lower only. Like we have not claimed, it is not that the amount in auto-populated amount is higher. Although the department will always ask you for claim and reverse in 4B1 to settle their books of accounts also, but that will have to adopt a logical methodology and the consistent methodology that every time we do the same thing, because at one side it is not an ITC at all. They are saying ITC is not taken. They are not saying ITC is taken and reversed or like that. So if ITC is not available at all, you can take a stand that we have not availed in 4A5 itself. But if you want to ensure there is no difference and to explain the department, you can claim and reverse it. In either case, it will not hit your credit ledger. In either case, it will not hit your credit ledger. There will be no interest implication. Does that clear your query, Madhuri ma'am? Okay, thank you. So we'll conclude this session and thank you everyone for connecting, for joining this session. We'll again meet on next Saturday. And thank you everyone again for being participative. And thanks to everyone for discussing the queries as well. Thank you all.